All right, my name is Chris Campbell. I'm a practicing CPA, and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping you out of jail. So today is more of a PSA, public service announcement, or just best practices when it comes to keeping and maintaining your books. As a business owner, your books are very important. That is the basis upon which it's determined how much taxes you need to pay. When I go in and I do the taxes of any particular business, it starts with the books and the bookkeeping. So it's very important that these books are relatively accurate, because if they're not, you could wind up underpaying, which I guess at the end of the day isn't a bad thing unless it catches up to you. But even worse, you could wind up overpaying, which is obviously a bad thing. You classify something wrong, you don't account for something, next thing you know, you're either accounting for more income than what you actually made, or you're including an expense or write-off that you should have. And next thing you know, you're paying more in taxes than what you should. Maintaining the books are very important. With small businesses, software has made quite the name for themselves. Owned by Intuit, it seems every time you turn around, there's a QuickBooks commercial on. And they make it seem so easy that you go in and you maintain your books, you're running a business, and they make it easy to do. Now, I will say that QuickBooks is a very user-friendly interface. They have made a good attempt to simplify someone doing the books for someone that might be a novice or not particularly versed in doing the books. But the thing is, folks that may not necessarily have any background in it, it's tough to have those books be accurate. When I've gone in with clients and they're using the QuickBooks and they've done it on their own and they don't necessarily have the experience with operating it, 9.5 times out of 10, the books are messed up. And when the books are messed up, you got to go in and clean it up. So the moral of the story is that if you're trying to save money by doing the books on your own, if you're at the point where you have the resources, bring someone in to go ahead and do those books, because what tends to happen is that there's usually a bit of cleanup that needs to be done, and the money that you think that you're saving, you usually wind up paying it out and then some at tax time, because folks like myself and my team need to go in and clean up all the mess that was made over the course of the year, so that we can get an accurate reporting of your business performance and pay the accurate tax. And if you have the resources, go ahead and get yourself someone that's experienced with doing the books. It's going to cost you a lot more in the long run. And if you are not at the point where you can have someone coming in regularly to look at the books, best thing you might be able to do is QuickBooks, and a lot of these other software companies have this, where they can connect directly to your bank and they can feed the transactions from your business bank account into the books. So if you do nothing else, make sure you connect your bank accounts to the QuickBooks so that all the transactions can come in through there, and then have someone that knows what they're doing go in and do all the classifications. It'll actually make the process a lot quicker. So you might not be spending as much money as you think if you have your bank feed connected. If you don't, it creates a problem. Then the work becomes a lot longer. So that's my word for today, relatively short. If you have any questions about this topic or any other topic related to taxes, accounting, finance, business, feel free to reach out. Happy to help. All right, that's all for now. I'll see you in the next one.